Hey everybody, this is Sil for a little bit of educational piece here. So that here we have the VIX. The VIX is an index, if you will, identifying and giving us a clue on the level of fear in the market. And so when it spikes aggressively, then we know fear levels are very high, which usually coincides with times when the markets are in big selling periods. So when it's super low, when fear levels are low, then of course it's quite the opposite. The markets are bullish and more bullish. So if you look at this chart I have up here on the VIX, you're going to see essentially how quiet things were, and the markets were extremely bullish, right, going into 2018 all the way into from 2017. And then when February hit, right, we got all that volatility. And typically when volatility hits, it doesn't go away that easily. And so what's happened, if you look at the chart pattern, you're going to see that it actually came back down on a breakout, just like a polarity like we talk about many times, and it bounced back to levels where we're now fearful perhaps that things are going to explode again. These things happen in cyclical manners, and they happen, every once in a while. We have to pay attention to that. So if I go back in time, you're going to see that we've had reasonable levels of fear that have not surpassed, say, the number 25 or 26, but recently we went all the way into 50. You go further back in time, you're going to see levels where we spiked even above that level back in 2015. That was when we had one of the worst bearish areas and times in the market. Now take a look closely. Look at what happened in terms of the trend going down thereafter. That just kept going lower and lower and lower, and that meant more and more and more bullish. But look at that pattern. That's a pattern that tells you ultimately that is going to break out. Since support levels are down here, it's going to break out to the upside. And so you kind of knew at some point here very closely that the bears were going to step in and fear levels were going to explode. So what I'm getting at also is, understanding the candles. Could the candles be red in a VIX format? Many people will say no, and I completely disagree. If you understand candles well enough and having the proper education that Steve has given us with all the educational tools and DVDs that he's provided, I say that absolutely we can. And then take it a step further, we do the daily recaps every day, 5 days a week, including the weekly recaps, which I think are instrumental in understanding the overall market temperature, if you will, and psychology. And all that will help guide you in terms of, is it a time to maybe be at rest and do nothing, or a time to buy, and what should you be buying, and then perhaps should you be selling, and then what should you be selling. So that takes you then to the morning trade setup and charts of the day for educational purposes, understanding chart patterns like I just showed you here, including the candle patterns, but also what to buy, what to sell, or at least a consideration based on current market conditions discussed in the daily recap and weekly recap, the charts of the day to understand the charts and the candles better, and then the morning trade setup to ultimately give you some guidance in terms of what should be purchased, what should be sold, and how and when, and how to manage those things as well. So take a look at the mycandlecharts.com site. It's our site where all our members join in and get to look at trade setups, charts, education, the daily recaps, the weekly recaps. We also do an international recap and so on, but I want to show you, at least from the standpoint of the current market conditions, how it relates to the VIX, the candle patterns that are present, the chart patterns that coincide, and how you can navigate so much better with this kind of education and all these tools at your disposal to work with you so that you make the best possible decisions for your own portfolio. Thanks for listening.